everyone, and welcome to the morning podcast for the 15th of December 2025. Now, over the weekend, obviously, we've had some interesting developments in Sydney. It's sad to see all the events that unfolded in Bondi last night, but, all the condolences and thoughts go out to the victims last night. But jumping into what's happened in the market, we saw Friday night a bit of action on the US stock market. Led by the tech sector. So, we've obviously over the last couple of months, we saw the AI thematic and tech sector really take the market higher to record highs. But again, we are seeing a little bit of weakness coming through. And this time it was led by Broadcom. So we saw it go down about 12% over on Friday night, as well as in general the general bit of weakness in the AI sector. Moving on to the index summary, as we can see, it's a little bit skewed, what we have in the chart, because the Asian indices haven't opened up yet. So the majority of the negative performance for the last week was done on Friday night. So as we can see in the Nasdaq, it fell about 2% on Friday night, and in the S&P about 1%. So, most of that move was from the tech index, and it's likely that we will see that flow through to the Asian session as well on the reopen. So it's very likely we'll see a weak open on the ASX as well as on the Nikkei. So moving on to the heat map, as we can see, where most of the red has happened. We're seeing a little bit of softness in Nvidia, Google, Microsoft, but the main ones are, the stocks have done incredibly well over the last couple of months, but we're just seeing a little bit of weakness where that softness in the thematic is really starting to come through. So Broadcom, it's obviously one of the largest chip makers. They do a lot of the processing chips for mobile phones, so mobile devices, and it's actually quite done quite well compared to expectations. However, I think the softness is coming because they've done a lot of deals with OpenAI. There's a lot of expectation on that, and the market's just really not seeing that come through to fruition. So I think the concern is that the delay of actual benefits from these deals will be coming in at 27, so a lot later than what it is expected, and that's why really we're seeing a bit of softness there. Oracle as well, just continued weakness continuing on from last week, so just in general a bit of correction there. Now I think we are likely to see continued weakness and a bit more softness in that tech sector over the next couple of weeks as, a bit more data flows through. But I think once the correction is done, the medium-term thematic still presents itself, and it's still, it's still valid. However, the market does need to work through some of the froth that's come through with a lot of speculative trading that's come around it, and a lot of the hype, right? So I think the deals that were promised, some of them will be reviewed, and that will cause a bit of a correction in the market. Overall, in the other sectors, it's done fairly well and stable. So in the financial and banking sector, we've seen it being fairly stable. There wasn't any really big movers over the last week, as well as in healthcare. I think healthcare is the one that we've been fairly positive on in this sector rotation. As we see a bit of correction in the growth tech sector space, we think healthcare is still fairly undervalued. Obviously, with a lot of the RFK policies that's come about over the course of the last year from the administration, that's caused healthcare stocks to really underperform compared to the other sectors. But traditionally, whenever there is a rotation from risk on and growth sectors, they tend to flow on towards the healthcare sector. So if we see the index continue to fall, we could see the healthcare sector fare better than all the other sectors. So in terms of other things on this week, we are seeing a bit more figures flowing out of the US. Now, obviously, some of the figures have been fairly stale due to the government shutdown. So a lot of the data that we are seeing over the last couple of weeks actually came from September because the data wasn't collected over that government shutdown. But we will see that slowly start to come through. Some of the employment figures, we saw the Fed cut last week, but I think it was basically priced in to that expectation for the market. But it is interesting to see that the market react where, the market priced it early on and gave it a bit of reason to rally up to new highs. However, I think now that's done, the market is starting to slow down a little bit and, being a bit wary of that. We do talk a little bit more about this in our market outlook for 2026. So the team has prepared what our views are for the next year to come. You can find that on Mosaic, and we will go through some of the strongest thematics as well. There's two parts of it. One is the broader geopolitical and macro view and what we think will likely occur in 2026, and the other portion is more a stock recommendation. So you can find both of that available at this link, which will prompt you to sign up to Mosaic, which is our in-house platform, and once you sign up, you'll be able to access what our thoughts are for the next year. So again, Mosaic is live now. So for the users, for the clients that we have now, you will all have access to Mosaic. For new users, please sign up. There's a 1 month free trial. You can see what's available on there, and basically be kept live and up to date with all our content, as well as stock recommendations if you sign up for our stock services. That's all for today. Stay tuned for the rest of the week, and we will update you accordingly for the rest of the week. Thank you.